Since the massive sell-off, the cryptocurrency market has been in a tizzy for the most of October. Since we have been patiently waiting for it, we haven't really seen any noteworthy price action this month. It is currently early in the morning, just before the financial markets open, if we are looking at the charts. By the time this video goes online, price activity will probably have changed somewhat. However, there aren't really any significant changes occurring in the majority of the space at the moment. Yes, there are some antique coins that are currently in high demand. Here are a few exceptions. However, for the majority of historical coin charts, we are sitting quite flat overall. However, when it comes to the market's price activity, Bitcoin is up roughly 1.1%, hovering at 109,000. It's not too crazy there. Ethereum is getting closer to $3,900, but XRP is still trading at $2.40. As I mentioned earlier, there hasn't been much of a movement in the market since we last discussed many of the pricing in this market. We're still waiting on a breakthrough. The live view of the current cryptocurrency market capitalization is now displayed on top of that. 3.69 trillion once more. And if we only look at this for the majority of October, we can see that not much exciting has happened in the last 23 plus days. Once more, the market is somewhat dull and annoying. I understand. I get it. I was just discussing this in the Discord earlier yesterday, saying that, yes, we are becoming increasingly irritated with the amount of, I'm tired of hearing that, oh yeah, we'll see all season, and I'm tired of the price action. This will be seen. That will be observed, and nothing will occur. I can also appreciate how annoying that can be, but it's all a matter of patience. I've stated it numerous times before. Compared to price action capitulation, which is currently taking place, time capitulation is far more effective. Rather than price action, time alone is shaking people out. However, the market does currently have a small amount of both, which is unhelpful. I just want to open up Bitcoin and XRP now that I've seen some of the market pricing. Since hardly much has happened in the last 7 days, I want to start by looking at Bitcoin. Though we officially reached a higher high on the 21st, we are beginning to make some higher lows. Yes, it wasn't really noteworthy. It was a higher high, though. This still has excellent structure. More higher highs and a longer period structure are what I want to see us achieve. I'd want to see Bitcoin start to rise significantly. Recovering 115, nearly 116,000, will undoubtedly be a fantastic beginning. Following that, we examine some of the higher tier levels on the chart, which are approximately 117,000 and 120,000 plus. However, over the past few days, Bitcoin hasn't done much at all, and I'm sure you guys are already aware of XRP by now. Yes, XRP has been incredibly dull. Actually, not much has happened. Furthermore, as I have already stated, there won't be any noteworthy price movements for any old coins in general. We still need to see Bitcoin take action in this situation because of it. Our goal is for Bitcoin to recover important levels. Let's discuss a few topics now. The cryptocurrency market itself comes in first. Returning to the cryptocurrency market itself, we can observe that the level of fear and greed is around 28. We continue to linger near important lows. This indicates that retail is currently the most frightened industry. They are terrified, anxious, and in a frenzy over what may happen next. And certainly, they are really frustrated on top of that. They are growing irritated. Additionally, the timing of this in the space is ideal. Let's get started on it. First, liquidations. When it comes to cryptocurrency, we are witnessing an increasing number of liquidations occurring nearly every other day. Now, I have created a video discussing the market manipulation being done by exchanges like Binance. Yes, that is still going on and will keep going on, unless someone intervenes. And by that, I mean that regulators might intervene in these exchanges. Beyond the exchanges, however, I believe that the most important thing to pay attention to are those that are liquidating or entering leverage positions that are being liquidated. The problem here is that a lot of people are using these exchanges to gamble. Exchanges where individuals who wish to trade against you can see your buy and sell orders as well as your trade setups. I've stated that a lot. Posts like this one, in which over 370 million US dollars are being liquidated, will continue to occur. The weird thing about this, though, is that we have been receiving updates about liquidations for the past few days, And it seems like the value of the assets being liquidated in these leveraged positions is beginning to increase steadily. I can't emphasize enough to you all how crucial it is to just maintain your position in this market. To get wealthy in this market, you do not have to use leveraged trading. That's what I'm going to say now, and I will emphasize it as much as I can. In addition to this publication, Barchart provided us with a significant update regarding money market funds. I have spent a considerable amount of time researching money market funds. As you are all aware, I have been discussing the values associated with money market funds. Right now, our total assets are $7.50 trillion. This is completely crazy. This is the highest point ever. If we are holding cryptocurrency once more, why is this so crucial to pay attention to? We're holding cryptocurrency now. Money market funds are irrelevant, right? The $7.5 trillion, the bulk of which, incidentally, is spent on retail. There is an abundance of enormous quantities of liquidity out there that have not yet reached this market, as seen by the $7.5 trillion that are simply sitting in these money market funds. And before the Fed makes a rate-cutting decision, money market funds here touched a record $7.37 trillion. According to the Investment Company Institute, high short-term yields from high interest rates drove money market fund assets to a record $37.37 trillion in mid-October of this year. At its October 29th to 30th meeting, the Federal Reserve is scheduled to lower interest rates by 25 basis points, with 2 further rate cuts anticipated before the end of the year. As of right now, I'm fairly certain that the only 2 meetings the Fed will hold coming ahead are in October and either January or December. I'm not entirely sure what they mean by the 2 extra cuts. Perhaps they mean October and December as well, which would make sense. I do believe that the same thing will occur. Furthermore, there are factors that could lower these yields and persuade investors to shift their money into gold, Bitcoin, stocks, and real estate. Potential asset rotations are highlighted by social media speculation, but historical data from previous recessions indicates that these changes have been modest and slow. The reason for this is that, according to individuals like Grant Cardone, if interest rates begin to decline, the $7.5 trillion that is currently in money market funds will begin to move into other assets such as gold, Bitcoin, stocks, real estate, etc. Now, I do believe that cryptocurrency will grow significantly, and we'll discuss why in a moment. However, I want to start by discussing this report that we also received about the U.S. Treasury. The U.S. Treasury is currently repurchasing its own debt for an astounding $1.9 billion. This is fascinating. The debt in question is scheduled to maturity between 2027 and 2054. However, this is also a component of the new extended effort to improve market liquidity. This demonstrates that quantitative easing is occurring whether or not the Fed is involved. The Fed is already beginning to implement quantitative easing, which is the most intriguing aspect of this as well. The Coastal Journal is here to break the news. In just 2 weeks, the Fed's balance sheet grew by $10 billion. The use of the Fed discount window, sometimes known as the lender of last resort, has increased by 238% annually. All of this follows bank announcements of losses and collateral problems. Thank you for viewing. Goodbye.